was it all worth it? This pain, was it really worth it?
Well, I think the corporate tax cuts are essential. I think they make us more competitive internationally. I think they will stimulate investment domestically. I think we had an antiquated tax system at 35% marginal rate corporate tax system when the rest of the world had moved to 20% and territorial taxation. We're fruitlessly trying to collect taxes internationally, which is we've never collected them. It doesn't work. So I think that was long overdue.
Okay.
I think we paid a high price to get them with probably $1 trillion deficit. When you consider growth.
But with what results, right, Ed? Because we had someone on earlier in the last hour from AEI, actually, in fact, who said who was all for what's been happening with this bill, but still admitted though that this was only going to add maybe 0.2% in additional net growth to the economy. Majority of Americans clearly don't like this tax bill. So was it all worth the cost of this?
I think it's worth the cost. I wouldn't, 0.2%, 2% over 10 years, that's pretty significant on $20 trillion. You pencil that out. I think even in the most conservative estimates, you borrowed about $1 trillion to get $2 trillion of accumulated GDP over the 10 years. So would you borrow one to get two? I think you would. Mm-hmm. I think because the
By
Democrats
that point, everybody voted out of office, though.
I think that's probably going to happen anyway in the midterms because it's going to be difficult for any sitting president who controls the House and the Senate to hold on to the House in the midterms. So that probably was going to happen anyway. I think the Democrats did a very good job of selling against this bill, which I think on the other side, ironically, means that the Republicans had to give more money away to the middle class in order to make it more popular in the long run to try to bolster themselves politically. Because of this, I think even President Obama recognized that we needed to make adjustments to our corporate tax code. Had he done that in his administration, he probably could have sold corporate tax cuts more effectively than Republicans can. And we probably wouldn't have had to give as much away to the middle class in order to try to sell this and make it work. Because I think the public just thinks that if you lower the corporate tax rate, investors are going to put all that money in their pocket. Mm-hmm. They don't see that competition is going to force them to lower prices, and lower prices will get passed on to customers. And ultimately, lower prices is, in effect, the same as higher wages.
So, Ed, how tough of a sell is it then for the Republican Party to sell this to the American people? We've talked about how unpopular this bill is. I think some polls still suggest that some Americans think that their taxes are going to go higher next year.
Yeah, I don't think Republicans have done a good job selling in advance. I think they think that all we have to do is wait, and when you see a substantial increase in your after-tax income because you're not paying nearly as much taxes next year as you were, that people are going to be quite satisfied and happy with this. So I think they think by the end of next year, taxpayers, voters, are going to see a significant increase in their after-tax income and a reduction in their taxes, and that's going to sell the bill. I don't think the voters are very keyed into the effect of deficits, the long-term effect of deficits. We've gone from 33% of GDP to 75%. We're on our way to 150% of GDP. $1 trillion is actually fairly small in the larger scheme of things. Not that I'm supportive of increasing the deficit, but I don't think it's going to have a big effect politically.
It was interesting, too. We heard some comments from Gary Cohn, and he seemed to really focus on carried interest and why it stayed in the legislation. I mean, essentially playing the blame game on Congress on how he made several attempts, in fact, 25 attempts, he says, to repeal carried interest. How did it make it on this bill after so much opposition, and was it a mistake?
So, I'm a big beneficiary of carried interest, just to be clear.
Of
but
course.
I think the problem, it's easy to talk about and it's extremely difficult to do anything about it. And the reason for that is that you're really just reassigning capital gains from one investor to another. If you do that, say, with a call option, that reassigned capital gains gets taxed at capital gains rates. Mm-hmm. And similarly, with a private equity investor, it is capital gains. It is reassigned from investors to the general partners. They end up getting taxed at capital gains rates. The reason that corporate executives don't get capital gains rate is because corporations are double taxed, and when they take the deduction as ordinary income, then the government says we're going to charge you ordinary income to make up for the fact that the corporation didn't pay those those taxes. And so there isn't that case in the case of options, or isn't that in the case of private equity, and so they simply charge you.
You're just talking your own stuff. Okay, all right. And okay, one last question, though, because Cohn did mention wages, thinks this is going to increase wages. Do you think it will?
I think it will, not as much as the proponents of the bill are trying to sell and make it out to be. They're obviously trying to push the extreme on as far as credibility will take them. I tend to be a skeptical person. Do I think it'll increase wages? Yes. I think it's going to be hard to see, because I think what really happens is you get a lower tax rate, so your profits go up. It spurs competition and investment, and a lot of that gets passed to the consumer through lower prices. What they're likely to see is less inflation, lower prices, not actually see their pre-tax wages go up, their hourly wages go up. I do think they will see their after-tax wages go up, because I think their tax bill will be significantly less under this bill, $1 trillion less.